All right, y'all, I want to talk about merging TPO sessions. Now, what that literally means is if we're looking at a TPO chart, we can see that at least for a standard TPO chart where every letter represents a 30-minute candle, this is dealing with 1 day of price action, right? 1 day of price action. And so what we can do is we can merge together all these days to get the TPOC, the time point of control, and the volume point of control for all these days together. Now, why would this be important for us? It's important because now we can really look at the discrepancies between time and volume. So if price is spending a lot of time somewhere, let's say price is spending a lot of time at the high of a range to create a time point of control, but the volume point of control is at the low of the range. That shows us that the volume is not backing up that move to the upside. And generally, the way I would treat this is I would look to short the next move up because we know that the move up is not backed up by volume, or even look for a chickens drinking water, a swing failure pattern of a consolidation, right? If we have some kind of Bart Simpson pattern going on at the high, here, let me actually just draw it out for us, okay? So basically, let's say that we have a range here, and we were trading down here like this, and all of a sudden we have a move to the upside, and now we've been trading up here, okay? So here we would also have our time profile right here, and let's say that our time point of control is right here, okay? This is our time point of control. Okay, maybe we have, obviously down here, we would have spent some more time as well. And then we have our volume profile, okay, which is showing us that we have a lot more volume, okay, that traded, let's say, down here. And this is our volume point of control. We had a lot more volume down here. And then we kind of have super low volume up here, right? Super low volume. And we see this discrepancy where we have the time point of control up here and the volume point of control right here. What is this telling us? It's telling us that although Bitcoin did get a move to the upside, it's doing it with very little market participation. There were very few players that were willing to actually step in and buy Bitcoin here, which means that this move to the upside is not backed up by the volume. It's not backed up by the traders stepping into the market. And so we can expect that price will come back down to touch the volume point of control. And so the way I would typically trade this is the best trades are going to be if the chickens drink, right? You have a clear high right here with low volume, and we get a move up and the chickens drink. How would we trade the chickens drinking water? You would trade it the way the way I trade it is I'm looking at market cipher B, I'm looking at the 1 minute money flow and momentum. You could also be looking for a decrease in open interest, potentially as we get our move to the upside here, potentially even lack of participation, CVD divergences. Or if we do get an increase in volume here, you can look for an absorption CVD divergence and a trapped traders getting trapped up in this area, and then enter a short right here. However you want to trade that, there's different ways to trade it, different confirmations to look for. But this in general is why we would be merging sessions. And there's 3 instances when we would want to merge these sessions: uptrends, downtrends, and ranges. Okay, so here's how we're going to do it. We're going to come into our TPO chart. We're going to double click on one of these sessions, and we're just going to click merge. Okay, we're just going to click merge, and we can go back in time. Now, let's say we want to merge the last 10 days. Then what we do is we click merge X right here. Let me zoom in, merge X. How many sessions do we want to merge? 10. Now, each session on a standard TPO chart represents 1 day. So 10 sessions equals 10 days, boom. Now we have merged 10 days together. And here we can see that for the past 10 days, we really don't have much of a discrepancy between time and volume, because this pink line right here is the volume point of control, and this white line right here is the time point of control. Now, this is great for finding discrepancies. Okay, let me merge another 10 days. Let's see if we can find any kind of discrepancy. Not at all. Actually, not at all right here. There's another reason why you might want to use something like this. Here, let me actually reset this. Let's merge now some other sessions here. See if we can find a discrepancy. The discrepancies are rare, but we need to take note of them, because they will help us making our trade decisions for that day, right? If we can see just so clearly that, let's say the time point of control was up here, but the volume point of control was down here, we would definitely look to short this, okay? Now, we would look to short this anyway, right? Because it was a really nice short. And I did take this short. Shout out to everyone who also took it, man. I gave that setup in the Discord just minutes before it took place, and it was juicy. But another reason why we would want to merge sessions is to get value area lows and value area highs that are more accurate than the value area lows and value area highs in TradingView. Okay, they're more accurate. So what I mean by that is this: if we're looking at a range, let's say, and we want to be trading the range and have the most accurate points of control and value area highs and value area lows, what I would do is we would come over here and we would double click the session. We have to zoom in order to see that. Here we go. And you would merge X. Let's say we want the last 25 days. So go ahead, merge the last 25 days, and here we go. We can now see our profile here, and what we want to do now is come over to TPO, go to TPO settings, go to POC VA, and click use volume value area for point of control. Okay, and now what this will do is this will now give you the volume, value area high, value area low, and point of control. Okay, you can see how it's changing. This is time, this is volume, and we can see here also that the value area high, the value area low is putting a little lowercase v before, letting us know this is the volume and not the time. And we go back to time, we can see things change slightly. But in general, time and volume tend to follow each other. Okay, so this is how you would merge. This is why you would merge. Right now, we can see that the point of control of all this time is around 39.050. If we go over to this area right here, and this was a pretty juicy morning so far. I took a few scalps here. That was the past 10 days. Let's go to a 30-minute chart, and we can see that things are a little bit different. If we just go back the past 10 days to, let's see where that begins here. This is beginning on February 27th at 19 o'clock. So let's go back to February 27th at 19 o'clock, and we will pull a fixed volume range through here. And let's just see if it lines up. Our point of control is 39.058, and over here our point of control is 39.05. Yeah, so it's basically the same, but the Exo chart will give you a more accurate. The value area high being 41.737. This one is about 41.9, right? So it's a little bit different. Technically, the points of control will be more accurate in Exo charts, but I typically only use TradingView. I'm just letting you know that this is a thing. So I want to talk about sessions. Okay, I want to talk about sessions as well. This template is available in the course materials. The sessions template. This is a TPO template, but instead of giving you each session being equal to 1 day, this is giving you the market sessions from around the world. Okay, so basically we have the London session, the Asian session, the New York session, and then a market close session. And the reason why this is important is because most volume occurs at the beginning of these sessions, specifically London and New York. The Asian session tends to have lower volume. So a lot of traders will trade New York Open, but we can see, look at this, like the beginning of New York Open, we get a big move to the upside right away. London session opens up, and immediately we get a big move to the downside and then move to the upside. This is obviously better during weekdays, right? During weekdays, but we can see here as well. Look at this in the London session. There's not much, kind of quiet. Then all of a sudden we have a big move to the upside. New York session opens, we have a big move to the downside. You will notice that a lot of times there's a lot of volatility injected into the market because a lot of people, especially more traditional traders, they start trading when the stock market opens, right? When the traditional markets are open, that's when they will also start to trade Bitcoin. So you can kind of see here, look at this. This is a case where Asia opens and boom, we have a massive drop. A lot of times we dump in Asian sessions. And so this is a very nice template for two things. Number one, very accurate single prints. Very, very accurate single prints. This template, I like to use 5 minutes and 40 tick. This will show you the single prints much more accurately than a regular 30-minute candle because we're using a lower time frame. And so if there is a single print here, this means that price only stayed there for 5 minutes or less. So that's really a single print, right? And so what I like to do actually when I'm looking for single prints is I will pull open the sessions chart. And let's say that like the day that we dropped massively right over here, it happened during Asia session. We can see that during Asia session, we have all these rows of single prints here. Okay, we have all these rows of single prints. And so basically, what we can do is we can mark these on our chart. If we see a big row of single prints here, like this one, 19, you know, I will mark this one on my chart and use it as some scalping levels, especially if there's confluence here with like a golden pocket. So we can see that we have the single prints closing at 190, right? At 190. If we come over here, let's mark that out, 4190. Actually, that can't be right. Hang on. These single prints begin at 40,190. Yeah, 40,190. Okay, now look at this, right? This is where the single prints would be filled. And then if we take, let's say, a golden pocket, hang on, from this high to the low that we put in right here. Actually, we put in a low right down here. We could even take the golden pocket from this high that we put in right here. And we can see that we have some kind of confluence, okay? Because we did get a little spike right here before coming down, right? Or you could take it from here as well. That would probably be more accurate. Actually, did we come up or down first? I don't remember. I think we actually came up first. So look at this. There's very nice confluence here with a golden pocket and a row of single prints being filled, okay? And so when this happens, you can expect a move to the downside from there, right? Because there's going to be some kind of reaction. We go to the 1 minute time frame there, and let's see what we can see. Let's see what we can see on that 1 minute time frame. Sorry for the slowness of my machinery over here, y'all. So we don't really see actually too many bearish signals, but I know I took this short as well. Let's when was this? This was March 10th at 8:34. Let's see what we could have seen on order flow here. March 10th at 8:34. Here we go. Wow, we came right up into the VWAP as well. March 10th at 8:34. What did we see here? We didn't see anything too much, honestly, besides a massive decrease in open interest. A massive decrease in open interest as we came up to fill the single prints. And so, yeah, we have a massive decrease in open interest. Not a lot of longs coming up to support this move. And then immediately, millions of shorts coming in, trapping all the people who longed up here. So yeah, we actually had millions of longs trapped up here as we lose the VWAP with open interest increasing, showing that, man, we're coming down. The shorts are coming in here. So that's how I like to use those single prints. Another thing I really like about the sessions template is the naked session points of control. Naked session points of control are basically just that. They are points of control from a previous session, and they tend to act as areas of support and resistance. Why? Because a lot of volume happens that is specific to these sessions, and so if we see that we had a point of control from that session, we can also mark this out on our chart for a potential trade. And again, I like to use confluence for these, right? I like to use confluence. So, you know, let's say, for example, we have up here from London a number of days ago, we have this naked session point of control at about 48.20. About 48.20, we have that naked session point of control. So let's go to our chart and see, do we have anything at 48.20? Let's put a line on our chart and make the coordinates 48.20. Let's go to the 1 hour here. Okay, so we can see, actually, let's go to the daily real quick. 48.20. Let's go back to the 1 hour. I can see right here that we do have a fib level, a 0.886 right there. Let me see if I have anything else in my TA. And what I like to do really with these is I like to look for confluence. I like to look for confluence. So we have a major golden pocket pull from the high to the low of this entire section. And so we can say, wow, that naked session point of control, that's a juicy one, because we have a golden pocket right above it. So we would mark this out and say, okay, you know, it's possible we front run this golden pocket a little bit because we have that naked session point of control right there. I usually would put a box of consolidation and just say, okay, now I know that this box is the juicy area. It's not just the golden pocket. We also have a naked session point of control there. And then I also like to look and see, you know, do we have any naked daily point of controls in that same area? No, we do not, but we can see that we have a spike in volume here, right? That's this spike in volume right here. You know, we might not catch this unless we knew, oh, look, that's a naked session point of control. So that's the two reasons why I use the templates, the sessions template. I don't really trade it in any other way besides looking for the juicy levels on it. But it is also nice to pull up if you're looking at this. You got your VWAP here. You've got your other levels as well. You've got the delta, and you could even turn on your footprint bar to be looking at CVD and delta and volume and stuff to actually like scalp on this chart. As we're coming up to areas of single prints, you would ask yourself, do I see CVD divergences as we're coming to these single prints? Stuff like that. One more thing I should notice, guys, take note of is the POCs for the sessions template. I have these set to volume, not to time. I have them set to volume, not to time, because really what we care about is the volume in these sessions. All right, guys, that's it for this session, the sessions session, and I'll see y'all in the next session that comes after the sessions session. Peace.